You're watching Worldwide Exchange, bringing you business news from around the globe.
US pending home sales data is going to be released today at 10 Eastern. Economist polled by Dow Jones Newswires are expecting a modest 0.1% increase in June. This after pending home sales soared 6.7% to hit a 6-year high in May. Joining us from Fort Lauderdale, Shari Olefson, author of Foreclosure Nation. Shari, good morning to you. Thanks very much indeed for joining us. Have we peaked in this cycle of home loan growth?
Well, home loans are down now, as we know, in part because of recent interest rate jumps, but also that's a seasonal issue. And the biggest issue, of course, is inventory here in the U.S. It's expected to be more of a temporary issue, though, as sellers get off the fence, comfortable with home price increases, and buyers get more comfortable buying. Yeah,
I mean, it's difficult to talk about one market because there are so many different states and so many different areas. But what is your general consensus for what happens? As we saw that little spike up in Treasury yields and mortgage rates as well, does that have a big negative impact or not?
Well, not really, because rates are still at historic lows, lower than any time other than in this past decade. So we're still doing good as far as interest rates go. And of course, you have to live somewhere. So it's a matter of renting versus buying. Again, the biggest problem here in the U.S. is still inventory, but we're starting to see some of those foreclosures work through the systems. Many of the states are changing their foreclosure laws so that we can get more of that inventory out in the street. And of course, as prices go up, Ross, we're seeing investors, the big investors, having less and less of an appetite because they're just not getting the returns they had hoped. We know some of these big funds that were buying homes in order to rent them are finding themselves with lower returns than they expected, in large part because they're just not able to turn around these homes as quickly as they hoped. They can't renovate them and get them back on the market, and so their purchases have significantly slowed down.
Yeah, although presumably as the prices go up, that does help with the foreclosure sales coming back online. So what supply impact does that have?
Well, it's a big issue. One of the big issues that's been holding a lot of buyers out of the market, in fact, has been financing. About 20% of the folks who were approved during the bubble would not be able to get a loan today. But we're starting to see more of what used to be called the subprime lenders entering the market. In fact, Raj Date, who was actually the assistant deputy for the Consumer Financial Protection Bureau that helped to write a lot of these new stricter loan laws, the qualified mortgage laws and so forth that take effect in January, has actually now gone into a business and intends to be offering loans to folks who don't normally qualify. So that's very encouraging to a lot of Americans who have also sat out of the market because they just simply thought they couldn't get approved.
Yeah, so if getting a loan is getting tougher, I mean, it just all plays into this debate about what the future of Fannie and Freddie should be as well, and what sort of guarantees and what sort of market we want. What do you think should happen?
Well, we've got the push and pull. Basically, all of these proposals are very similar. They just vary in how quickly the government should get out of financing and where the government should remain ultimately in financing. But the ironic thing is, and we've got proposals pending in the House and the Senate now that vary on that spectrum of those issues. The ironic thing is that the change is happening anyway, even without government. So, for example, we're seeing the cost on FHA loans going up. Last month, FHA announced that borrowers now have to carry mortgage insurance for almost the full life of the loan in almost all instances, where that used to only apply until, the mortgage insurance until a borrower paid down their equity. The guarantee fees on Fannie and Freddie loans are going up. FHA is restricting its reverse mortgages, which are mortgages that older Americans generally get for their homes. So we're seeing the private market getting into financing even more, whether or not Congress makes its decisions on these issues or not.
Does that mean we're getting back to sort of 100% financing coming back? Is private markets getting involved again?
The private market is, that's correct. And there's an interesting turn too. Now that Fannie and Freddie are making money, remember Fannie Mae made about $17 billion last year and Freddie made about $11 billion. Congress is not so eager to cut off that gravy train because that's revenue that the U.S. government can really use. And within the last couple of weeks, we actually had a lawsuit filed by investors who are objecting now to the fact that the Treasury stepped in and delisted their shares and pretty much forced them out of any profit from these giants. and we can expect more lawsuits as the GSEs continue to make money. We've got hedge funds now lobbying Congress to go back and put Fannie and Freddie in their original condition, make them independent of the conservatorship. So, you know, sometimes you have situations where real life is stranger than fiction, and no one could have predicted these things.
Now go back to the future. Okay, Shari, stay there for a second. We'll get your view on this other story as well. Although Ben Bernanke's term only ends at the end of January, plenty of speculation on who's going to replace him as Fed chairman. CNBC's Hampton Pearson is in Washington with more. Morning, Hampton. What's happening?
How you doing, Ross? Well, it's looking like September is really setting up to be a big month for the Fed in a lot of different ways. Not only are some economists setting their taper target for September, but President Obama saying over the weekend that's the earliest he could announce a successor for Fed Chairman Ben Bernanke. Fed Vice Chairman Janet Yellen and former Treasury Secretary Larry Summers are emerging as the two front-runners, if you will. Now, congressional Democrats have been circulating a letter praising Yellen, and former Vice Chairman of the Fed, Alan Blinder, also endorsed Yellen in an op-ed in the Wall Street Journal. Blinder wrote, quoting now, "I can't say that Janet Yellen is tan and rested. She's been working far too hard for that, but she is certainly ready." Now, one person who didn't reveal his preferred choice for the position this weekend was Treasury Secretary Jack Lew. Take a listen.
Chairman Bernanke has been an extraordinary and remains an extraordinary Fed chairman. I'm going to keep private any conversations that we're having with the president on the question of when and what kind of succession there should be.
Now, with the president and Congress facing a September showdown over both the budget and the debt ceiling, it's highly unlikely we'll get an announcement on Ben Bernanke's successor until October at the earliest. Ross?
All right. Okay, that's the runners and riders where we stand at the moment. Hampton, thanks for that. That's the latest from Washington. Shari, you heard Hampton's report there. Who would you like it to be?
You know what? It really doesn't matter, because I think the government is going to keep, in terms of housing anyway, the government is going to keep the interest rates about where they are for some time. And we've got a long way to go before interest rates really affect housing affordability. I mean, rates would have to go up 7% at least at this point in order to make housing unaffordable for Americans. We're still 25% below where the prices were at peak. So I don't see the appointment in terms of housing making a real issue, at least for the next 5-6 years in the future, in terms of housing at least.
Okay, Shari, thanks very much indeed for that. Good to see you this morning. Shari Olefson, author of Foreclosure Nation, joining us from Fort Lauderdale. Well, I'm sure the weather's very nice.